Justin. Appreciate you sitting down today. We're going to talk about Mass Housing. Our team is one of the number one teams in Western Mass for this product, right?
Correct.
All right. So we know a little bit of Mass Housing. So let's educate people here on what Mass Housing has to offer. So where do we want to start?
Yeah, I would say one of the most interesting programs to start with would be the Workforce Advantage Program.
Okay. All right.
Yeah.
I'd agree. So this is the best program really in the arsenal of Mass Housing. This one comes with $30,000 in down payment assistance. I mean, that's incredible. But where it gets really awesome is the fact that that $30,000 comes at a 0% interest rate with no payments. So that's where we're starting. I like that one. You're coming out strong. $30,000, 0% interest, no payments. It's not free money, but it's cheap money, meaning they let you basically borrow that money until you don't need it anymore. When you go sell the house or refinance, you just give them back the money. So instead of getting a loan for, say, $300,000, you only need a loan for $270,000 because they're going to give you the $30,000 with no payment and no interest whatsoever. So that there alone saves you a couple $100 a month, right?
And what can you use that money for, Brad?
So you can use the money for both down payment and you can use that money for closing costs. So we can actually apportion it out. So let's say closing costs, we'll just keep numbers even. We could do a $20,000 down payment, $10,000 closing costs. You literally are walking into the house with no money.
Yeah, it's a tremendous opportunity for first-time buyers to get in. Usually the down payment is the biggest obstacle with young buyers these days. Folks have student loans. Things have gotten pricier.
Yep.
This really bridges that gap to get them in the foot in the door in the housing market.
Yeah, absolutely. Now, it gets better than that because on the conventional side, there's two versions to it. There's FHA and there's conventional. But on the conventional side, you also don't pay any mortgage insurance. It's what's called a LPMI or lender paid mortgage insurance, meaning it's already built into the rate.
That's terrific. And
Yeah.
it really helps reduce that monthly payment as well.
Oh, yeah, absolutely. So, this similar house with other program, you're not paying anything on that $30,000, right? Plus you're not paying mortgage insurance. Let's say a $300,000 house, it's probably a $300 a month savings almost. I mean, depending on credit score and things like that, as far as what you're saving. It's
a car payment.
Yeah, it's absolutely enormous. Plus, on top of that, the rates on the Workforce Advantage are actually lower than the standard first-time homebuyer program with Mass Housing as well.
Now, is this a conventional loan program? Is this an FHA loan program?
So both. So FHA and conventional. So on multifamilies, there is a 3% minimum investment, meaning you have to have 3% into it yourself. So generally, the way I like to explain it to people is closing costs are generally right around that 3% mark anyway. But the way I like to explain it is that you're going to pay your own closing costs, and then we're going to take all of the money and put it towards your down payment. That's on multifamilies. But on single families, you can literally walk in there with like nothing out of pocket. No mortgage insurance, no payment on that $30,000.
Below market interest rate.
Yeah, exactly. So just enormous savings. So anyways, on the conventional version, you do have that. On the multifamilies, the 3% investment. On the FHA, though, that doesn't exist. It's just regular FHA guidelines.
Right. And now, are there income restrictions on these programs?
Yeah, income restrictions do apply. So let me actually just pull these up here real quick. This program works differently than the first-time homebuyer program. It does depend on your household size. Okay, so how many people are in the household, adults, children, and it also depends on household income. So
very important.
Yeah, absolutely. Let's say you and I were buying a house together. We were living in the same household. If I'm on the loan myself, my income's being used to qualify for the loan. That's what's qualifying me for the loan. But to determine if we can qualify and get into the Workforce Advantage loan, we'd have to also look at your income to see if the household income is under limits. I'm doing it myself. I'm the only one on the loan. I'm the one qualifying for it with my income.
Right, but household income determines the eligibility of the program in general.
Exactly. Right. So we'd have to look at other adults, anybody over the age of 18 in the household, and what they might be making to determine if you're going to qualify for this program. The income limits depends on household size. I mean, you go everywhere from a single household in and
they vary by county, correct?
Yeah, exactly. So looking here real quick, if I were to look at Hamden County single one-person household, $61,350. All right. Honestly, somebody making that really needs this program to afford a house in this market. But you go up to say maybe it's a couple plus one kid, well, now couple plus one kid, we're at 78,850. A couple plus two kids, we're up to 87,600. Right. So, and then you get into some of the more expensive markets, like let's go to Suffolk County, let's go to Boston, Chelsea, Revere. That's the highest one. It starts at 91,200 for a single person household and goes all the way up to almost 172 for like an 8-person household if you got more people.
They have extended family that
multi-generational housing situations and things like that. So it is limiting without a doubt. This is made for a lower income bracket.
Right. It's a needs-based program.
Yeah, exactly. So made for a lower income bracket to really help improve and increase home ownership for that group, right? So that's what it's there for. Now,
number of units, it can vary a little bit.
Yeah, so single family, as we said, no minimum investment. You could walk in there with almost nothing out of pocket. You know, you're paying for some stuff. You're paying for some appraisals up front, some inspections and things like that if you're choosing to do those, which I personally highly suggest. But all the way 1 to 4 units.
Are there any areas of the state where this would not apply?
There are no areas. It's all of Massachusetts. All of Massachusetts. The only restrictions and changes based upon the areas are going to be those income limits. There's also some acquisition cost limits as well. I'm pulling those up too, but they're pretty generous.
Which is purchase price.
Yeah, exactly. Right. What's the purchase price? It's not a loan amount limit. It's an acquisition cost limit. But those are relatively generous. Like, let's see here. If I look at Hampden County, $510,000, right?
Very generous, sure.
Quite frankly, at the income levels of this program, if you're going to qualify...
The typical buyer's not going to end up that high in the purchase price.
Yeah, you're not hitting those purchase prices anyways, right? Yeah. They're pretty generous for where this program's at, what this program is.
All right, Brad, so just to recap, we have the Workforce Advantage Program, $30,000 down payment assistance.
Pretty good.
1 to 4 units.
Yep.
First-time home buyer program.
It's a first-time home buyer program, yeah, absolutely.
Fantastic. Give us a call if you want some more information on that.
There's no application for this program, right? You're applying for a mortgage, and because we are one of the limited approved lenders for this program, and because we do a lot of them as the #1 Western Mass team, we automatically are looking to see if you qualify.
One of the first things we do is if we see you're a first-time home buyer program, the first thing we do is look to put you in this. Which one of these do you fit?
Yeah, absolutely. I mean, that's just basic, right? We want to get people the best deal they possibly can and get them the most money they possibly can. So,
exactly.
Yeah.
Exactly. And so now they also have a first-time home buyer program.
That is correct. So first-time home buyer program, they call it first-time home buyer program, but the Workforce Advantage, of course, as you pointed out, is first-time home buyer, as you know. But their first-time home buyer program is more lenient than Workforce Advantage in income limits. So if you consider Workforce Advantage has income limits for lower income, the first-time home buyer program is more moderate to even some decently high. The income limits for this program, like just for, say, most Western Mass areas, I'll pull this up, 127,700 in Hampden County. Yeah. Franklin County is the same thing. Dukes is 128,900.
Much more of a moderate middle income program.
Yeah, exactly. But then you could go to Suffolk County. You could Boston and Chelsea, for instance, have the highest income limits at 163,700.
So really, if you think you may not qualify for one of these, you may be wrong about that. So you definitely want to check with us.
Yeah, absolutely. Yeah. Like somebody making 150 grand might think, nah, I don't qualify for these income restriction programs, but like...
Yeah, they're buying in Suffolk County.
There's actually settlements. Middlesex is up there. Norfolk County, Plymouth County is close to that. The Boston area, Nantucket, 153. So, I mean, yeah, they're pretty...
And now, does this one also offer a down payment assistance?
Yeah, so the down payment assistance works a little bit different on this one for everybody out there. The down payment assistance on this one is $25,000. Again, it is not free money, but it's very, very cheap money. All right.
I actually love how they do these programs versus some of the other states.
Yeah, for sure. I mean, it turns out really well. So it's $25,000. Again, as it was with the Workforce Advantage, you can use it for closing costs, down payment, and oh, by the way, buyer broker commissions as well. We can
very big one with what's happening now and the changes on how buyers agents are going to be
absolutely paid. Yeah, absolutely. So we've got $25,000 there to work in to use for all this stuff. And
how is that down payment structured?
It's structured as very cheap money. It's at a 2% interest rate, and they amortize it over 15 years. So on the first mortgage with the program, you get a 30-year fixed rate, and then with the $25,000 that you get for down payment assistance, you're getting a 15-year fixed rate on that $25,000.
And I really like that because there's a little small portion of your mortgage now that you're paying at a very accelerated equity pay down rate. Because it's a 15-year note, which I think is a really smart way that MassHousing has structured this down payment system.
Well, 100%. It's crazy. So like if you actually take the numbers of somebody who were to use this program versus not use this program, and they say wanted to refinance in 5 years. Well, first of all, you have part of your money borrowed at only 2%, right? So refinance, to make sense, you're going to have to go down in rate a good amount because you're averaging. I don't want to call it an average because it's a blended rate, because $25,000 on a second mortgage and $350 on a first. You can't average those, but your blended rate is lower. So you're already paying a much cheaper rate when you're blending them together. But when you go to refinance, as you just said, part of your money is being accelerated and paying down super fast because it's a 15-year. And you owe a lot less than you would on a regular loan.
Yeah, other states don't do it. They do it a little bit differently. And I have always really thought that was a really smart way that MassHousing structured their down payment assistance.
Yeah, absolutely. So great down payment assistance. The differences between this and Workforce Advantage, there's still an FHA version. There's still a conventional version. You can still do multifamilies, 1 to 4 units. You still have the 3% minimum investment for the multifamilies, not on the single family. Again, you can walk into that with next to nothing out of pocket.
The way I like to think of these down payment assistance loans is with this money available and you can accommodate the down payment and closing costs, sometimes folks have some of their own money that they may have considered putting into it, where maybe that money that they have is best used to maybe pay off a couple of debts that can have a much bigger impact on their budget. So having the down payment assistance funds available really just gives us options as mortgage professionals to structure the loan in the way that's most advantageous for the buyer and really maybe minimize the impact of a new housing expense on their budget.
Yeah, no, 100%. Without a doubt. I had one that we actually are closing. She just went under contract earlier this week, so she'll be closing at the end of the month, where she had it wasn't the best financial decision, admittedly, on her part to buy this car, but she had about a $700 a month car payment with like a $23,000 balance or so still remaining on it. And that was really pulling her out of being able to even afford a house at all. And so she had the $25,000 in order to buy the house herself, right? But we were able to come in, and she was trying to get approved, and she wasn't even thinking about down payment assistance because she had it. And by the way, everybody out there, even if you don't need it, it still might make sense. So hit us up.
This is a great example.
Instead of basically not being able to afford a house because of this huge car payment, we were able to let her pay her car off. Got rid of $700 a month in payment. Now completely just a 180 on her budget. That 7 month just completely turned it around. And now she was able to afford a house, whereas before she was feeling strapped and feeling she could
sleep a lot better in that new house, having structured it that way, alleviating that budget.
Absolutely. And she'd rather sleep in the house than a car, right? So she was super, super pumped about that solution for her in essence.
And this program available throughout the state as well?
Again, throughout the entire state. You don't have to buy in certain areas. You don't have anything like that. It is available everywhere. And the rates typically are slightly below market rates. Now, Workforce Advantage that we talked about already, they're lower than this program, but this program still is usually a little bit below market interest rates. I'm not going to tell you it's a ton below market interest rates, but slightly below, to where when you combine that along with the down payment assistance, like a home run.
Right. Absolutely.
You can't lose. So $25,000, 2% interest rate over 15 years, much more generous income limits. And that's it.
1 to 4 families as well.
1 to 4 families.
Yep. So it's the first thing we're going to look at when any buyer's pre-approval comes in is, hey, do they qualify for one of these programs? It's going to be in their best interest. If they don't, we go from there, but that's where we really start with everyone.
Yeah, absolutely. 640 credit scores. That's important because the MassHousing program, they actually brought back the FHA version. It was gone for a little while. They had it on the Workforce Advantage, but they didn't have it on the regular first-time homebuyer. But they brought back the FHA version, which was super important because even though their credit scores limits were 640, you still had to get it approved through the automated underwriting system. And at 640, you didn't get a ton of people approved conventionally. You really needed more like a 660, 680, maybe a little higher than that.
So the FHA program really allows us to fill that gap for those folks that can't quite get there with essentially no money down.
Absolutely. Right. And especially on those 2 to 4 unit properties where conventional requires even a little bit better credits. FHA is just a little bit more lenient on that credit side, and sometimes can be better too from a mortgage insurance perspective. It's a little bit cheaper, depending.
Programs are really able to catch a huge majority of first-time buyers. It's one of our first stops when we look at someone, which is why you're one of the top Mass housing lenders in the state.
Yeah, that's why our team is there.
Yeah.
Now, one thing that a lot of people don't know about this program is the mortgage insurance is Mass Housing's own product, okay? So whether it's Workforce Advantage or not, we said Workforce Advantage doesn't have mortgage insurance. It does technically. It's just paid for in the background.
Baked into the program.
It's baked into the program. It's included in the rate, right? So it's lender paid. So the mortgage insurance is still there, but this program, Mass Housing, has job loss coverage.
Wow.
So you were to lose your job, there's rules obviously that apply to all this, but if you were to lose your job, it will actually pay your mortgage up to 6 months.
Wow. It's an incredible bit of peace of mind. Again, also baked into the program.
Yeah, absolutely.
I know of no other program that does that.
There is not. That actually, it used to be a feature that was somewhat popular probably 20 plus years ago, and they just did away with it completely, right? And if anybody was still offering it after the 2008 crash, like our economy crashed, and so many people were unemployed, they got rid of the job loss stuff because it was just becoming too costly, but not Mass Housing. Mass Housing has job loss coverage in their mortgage insurance. That's
a great feature.
Yeah, that's awesome. So anyways, we have Workforce Advantage, we have the regular first-time homebuyer program, and then we have the HFA Preferred and HFA Advantage programs as well.
And those are a conventional type program through either Fannie or Freddie?
Yeah. So the difference is that you don't have to be a first-time homebuyer to get these programs. However, you have to still be a first-time homebuyer to get the down payment assistance. Sure. So you can couple these programs with that. So these programs are probably the least popular in the bunch for Mass Housing. The advantages of these programs are this: in certain areas of the state, with those programs, if you're a first-time homebuyer, you might get a slightly higher income limit. You can still couple it with the $25,000, not the Workforce Advantage. That's got different income limits in itself. But regardless, comparing it to the first-time homebuyer program, you can get slightly higher limits, but you also don't have to be a first-time homebuyer for this program. You might be able to get lower interest rates here than you would on the market. So the loan level pricing adjustments for credit scores and things like that. So if you come for a loan, as you know, you come for a loan, you have a lower credit score, you're going to get a little bit higher of a rate. There's adjustments when you have that. This program here has less adjustments.
Yeah, it's a little more forgiving.
Yeah, it's forgiving, and you might get a better interest rate even as a non-first-time homebuyer as long as you meet the income limit.
Also, another reason why this is the first program we essentially vet with every buyer.
Absolutely.
Every single buyer. You start there, work your way down, from best to the next best options.
Yeah, and I think you and I, we've talked about this before. We have the same philosophy. When somebody comes into us, we're like fastidious about like where can we get the best interest rate, even if it's in a program that's not quite as widely used, right? I think most places look to the standard Fannie Mae, Freddie Mac, FHA, VA. There's other stuff that's...
Yeah, I recently had a buyer that this happened with. They were coming in 20% down. They were actually buying a family house, but nonetheless, he was a first-time buyer, and he had not even thought of it. Yeah. And we were able to get him into one of these programs, and the rate at the time was about 0.25% less, and actually he closes today. Yeah,
and everybody thinks of these programs as just down payment assistance.
Right.
But it's not. Sometimes it is just like you just said. They're closing at 0.25% lower than the market.
Yeah, like that's $300,000 loan. That's a lot of money. So very happy to find that out.
Yeah, that's nutty. That's awesome.
And again, what's best for the client is what we're going to look for first.
Yeah,
and make them the happiest client possible. And that's what happened in this case.
Yeah, absolutely.
He was thrilled.
Yeah, absolutely.
The last thing we wanted to touch on with the HFA, it's 80% of area median income. Is that?
So there's actually two versions. They'll have different interest rates. There's one for below 80%, and there's one for above the 80. Again, the income limits are similar to, but sometimes slightly higher than the standard first-time homebuyer program. There are both, and you just get a little bit better rates, better mortgage insurance, things like that when you're below the 80%.
So there's just a ton of options with Mass Housing. Let us know. We'll filter through all this stuff, figure out which box you might fit into, and hopefully save you a bunch of money.
That's pretty much what we do. Yeah. So our contact information is up on the screen. Of course, hit us up. We are here to help guide you through this. It can be complex. If you're Googling it, you're not getting the information. People call and they're like, well, I read this and I read that. And I'm like, those were guidelines 4 years ago, right? Yeah. So just give us a buzz. That's what we do. We're up to date on this stuff. We want to walk you through. We love our first-time home buyers, right? We want to help people get into the best program possible. And in Massachusetts, it doesn't beat this.
It doesn't beat it. And even if it's not in Massachusetts, you're licensed in 49 states.
Yeah, everybody. Utah. Sorry, I'm coming at you soon, but
we can help you no matter where you're going.
Yeah, absolutely.
Fantastic.
So, all
Thanks,
right.
Brad.
Thanks, Justin. Appreciate you hanging out with us and talking through this program with us. All right.